Welcome and thanks for stopping by. I'm Coach Craig with Digital Micro Trading. Today's topic is investing in patience for 2025 trading profits. Let's go right to it. 3 elements to cover with trading patience. So, the number one thing is the time. Do you have the patience to wait for your trade model time? So, if you don't have a trade time model, that would probably be one place to start. You've got to have an optimum time if you're going to put money at risk in the market on a regular basis in 2025. What's the highest probability time for you to do that? And for me, I've got that well defined. I've tested it, and I know the most important times in the morning, times during the week, and times during the month, times with news. All of that needs to be taken care of. The second element is your patience for if you're in the time and you've got the time model is what about the trade model showing up? Because just because you've got the time down doesn't mean your trade model is obligated to show up. Sometimes it's not going to show up, and you're going to need patience for that. If you've got the time of day, you've got the day of week, you've got the week of month, then what about the model? You are looking for something very specific to show up for your AAA trade setup. And the third and not least is trading. You're in it, you put money at risk, you've bracketed your trade, take profit, you've got to stop. And do you have a patience for either one of these to hit? Not that you can't change your take profit and maybe do a partial or maybe adjust your stop later because there's a time element and you have a time stop, not just a price stop and nothing's happening. But the whole point is in the holistic nature of patience, these are the things that I found in 2024 I'm taking with me in 25 for more holistic patience. So 3 times a day, I'm gonna look at these 3 things, these 3 elements, my 3 times a day for trade time model, trade model that to set up, and then my TP, take profit, or my stop. Invest in your trading success for 2025 with Coach Craig. Improve on your trade model execution because it is about the execution. It's not about theory. It's when you press the button, are you executing on the trade model? One-to-one coaching sessions and trade accountability with the partner coach. Details are in the description. Weekly S&P 500 futures. So this is what it looks like on the weekly chart ending the year. You can see here 5935.75 on this line. I've got marked out some dash lines for Thursday, Friday. We'll have to go a smaller time frame. Basically, this is a premium on the Bollinger Bands because we've not violated this black line right here. So until we do, technically, we're still in a premium, but getting close to the crossing here. So let's look at the daily charts. Daily charts on the left, Bitcoin. So with Bitcoin, it actually looks stronger than the S&P 500 in the middle and the NASDAQ on the right because first off, the candles are green. And you can see here the premium wick of the candle I'm pointing out here actually penetrated the 3 EMA, the 9 EMA, and got all the way up here to almost 97,000. And we did not touch the 91,419 lower Bollinger Band. It's been weak the prior days. In the middle, the S&P 500 had basically, it didn't quite touch, but let's just call it 2 days in a row lower Bollinger Bands. This is obviously going to be when we open up after New Year's Day. Very important on penetrating a bit the lower Bollinger Band and seeing if it can hit it and pierce it. 3 EMA was touched above, and that came in at 5970.42. And you could see the candle wick again pierced that. 9 EMA, not so much. But see, Bitcoin did do that. And then, of course, way up here, 6079 seems like miles away. That's the middle Bollinger Band. I pointed out how on the weekly we hadn't gone below, but on the daily, we're definitely below. This is a deep discount here. We'll see how it goes on Thursday and Friday, but I'm definitely going to take a look at the lower and the 9 EMA. That's going to be very much my focus. And I am noting this 9 EMA more now because we've had 2 days of air not touching or piercing through above, and that currently closed at 6017. The NASDAQ, I don't trade it, but I just want to see what's the confluence. We did finally hit, you could see just barely pierce that lower Bollinger Band, which was 21,189.44. And we closed below that 3 EMA at 21,420. So to me, this looked a little bit weaker than maybe the S&P. So this is third place, second place, and first place for strength goes to Bitcoin. So that's it for the dailies. Next chart. Renko on the left, 4-hour on the right here with Bollinger Bands. So these are definitely one of my go-to charts. So let's look at the Renko with the Keltner channels. This was more of a difficult market here. For sure, you had to have a lot of patience because note that we were hugging this red middle line on the Keltner here. And so this really didn't break down until after the silver bullet, 11 a.m. Eastern Standard on the 31st. Once we got below this red line, we just stayed in a blocky pattern. I wasn't real impressed with how this looked. Obviously, with the holiday, it's light volume. So I did scalp for actually along the morning hours. It wasn't that huge of a day for me at all, both Monday and Tuesday. But the idea here is when your trade model's really not showing up, you better have tight money management and better be the lowest leverage. It makes the best sense. So I was really doing 1 or 2 micros at the most. On the right is the 4-hour, and that tells a lot better story because you can see we're just in this downtrend below the middle Bollinger Band on this middle, which is 6007. So that's a little more realistic here just to hit that 6,000 number. And you can see here we really pierced this week so far. The lower Bollinger Band, not so much here on the session for the 31st. But I do have these lines drawn because on the dashed lines, 58.97 and in the 58.70s, let's call it, these are some areas of confluence. In fact, you can see the low here back around the 20th. This is one of those sell side liquidity levels. So let's just call this whole thing in between these two dash lines, sell side liquidity zone that I'm looking to see if it will touch that, even if it just does a candle wick action on the 4-hour chart. So I'm going to watch that carefully. Next chart. US dollar, VIX volatility, and the treasury yield on the micro 10-year. So let's start with US dollar. The stock markets are going to have real trouble if this dollar keeps going up, and that's what it's doing. We'll close at 108.480. I think we're going to go into the high 108s and knocking on the door of 109. The trend is up. We've been bull flagging the last several days. All this happened after the Fed, when this is what's given us higher yields. So you got a high dollar, you got high 10-year treasury yields, and that's going to compete on an inverse basis with the indexes on the equity market. So that's a big deal. The VIX slightly elevated, closed at 17.35 on a doji candle. So definitely this thing could go back up. We just need a volatility event. And on the right, here we are. We're talking about the yields being up. So we've had a bull flag here and we ended up on 458, 4.58% on the 10-year yield. So we're sticking around the zip code and yields are not retreating at all. There is a fair value gap here between the 17th and the 19th. I didn't draw it out. As long as we stay above that fair value gap and don't have a daily close below it, I see yields being bullish. Again, that's a negative for the indices at this beginning of 2025 year. Next chart. Here's how we closed 2024 on my Mag 8. So Apple definitely the last few days of the year had a decline, but you could see in December we still closed up. So it held up in probably one of the better charts here on these 8 charts. Nvidia closed a bit down considered to where it opened up in the beginning of December. So 134.29, but still for the year it conquered for sure. Tesla, same thing, I would say, but December here at the close, 403. So it was up on the month for December. And Google looks real strong. So we were down here on Google beginning of the month. We closed strong. So Google is definitely up there on the top chart. Not liking the Microsoft chart, not going to go on it. And I may even replace it with either Amazon or Facebook in the new year. We'll see. Oil's going up. It's been dead, and we'll see if this thing has legs. 71.72, definitely up from the beginning of the month. Bitcoin, again, we started it the month definitely a bit higher. We ended it at 94,120 here. So we'll see how that goes for January. It was slightly green. And then, of course, the dollar, we already covered that. Very strong bullish chart, and it's not letting up. After this bull flag here, we closed green. So we'll go to the next chart now. The go-to 15-minute chart on the S&P Mini. Save the best for last. This is the dessert. So this is the breakdown. You can see why I was bullish here. This is London session, 4 a.m. in the morning. We go up here. We come back down to a middle Bollinger Band. We go up the London high, basically, or after post-London and Globex, the high was 59.83. And then we just hug this middle line on the Bollinger Bands, and then we narrow into a tweezer here. And then we had these relative equal highs with candle wicks. So I was really watching this closely, this action. I didn't like the candle bodies of how they were all blocking out. This was definitely high resistance conditions, not what I liked. So I stopped trading early on one of these spikes up, and I didn't feel like shorting too much today, and so that didn't really happen for me. But you can see here the silver bullet starts on this candle right here. We go back up to relative equal highs. This is where I was on this green candle waiting and stocking with patience, and I wanted to short, so I missed this. I was ready to pounce, but it didn't happen. It didn't. This wick fell short of this dashed line, so I'll blow this up a little more. So this was the main play, and sometimes that's just the way it works. I could have probably done better by maybe taking a partial short when it got so close, but again, wasn't liking the action here. But I should have known with the breakout, the tell sign was this very tweezer effect. Whenever you see this on a Bollinger Band and this squeeze like this, there's going to be a breakout with big displacement. And we did have that, but it took a few candles to go down. So this candle, 1030, really started it. This was a bit of a displacement into these discount candle wicks. It took all the way to the silver bullet ending at 11 for this thing to finally plunge. And how much did it really plunge after the displacement candle at 11? So we closed here at 59.52, and the low of the day, it took the afternoon to get there, but we went 59.18. Yeah, it got there, but I don't like how it did it, and I was being very strict on leverage. I was being strict on time, and then that was the level of my patience within a confined area of time. So time's always first, and then price action, doing what I wanna do it in either low resistance or high resistance liquidity conditions. So this is a good chart for me to study over the holiday a little bit before we open up for Thursday, and I'm looking to get active on Thursday, Friday. It might be late Thursday, if at all, but I'll be looking for the higher time frame dailies, especially on that lower Bollinger Band. So that kind of wraps the New Year session up. I hope everyone's had a happy New Year, and I'll see you back on the charts here with a new video, probably either late Thursday, most likely Friday. I want to thank all the subscribers and those of you that are new to the channel. Welcome and aloha. Take care. See you in 25. Bye.